Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. Now we have covered the Fed's actions, but interesting set of moves yesterday after the initial dollar weakness post the meeting. There has been subsequent strength in the dollar, pushing euro below 1.18. There has been some profit taking in gold, which went as low as 3627 yesterday. And in fact, even rupee weekend once again going beyond the rupees 88 mark. On the events front, we had the Bank of England meeting where rates were kept unchanged, and today morning we have got the rate decision by the Bank of Japan. Good morning, JK. What are you making out of these moves? Do you see a dollar recovery in sight?
Good morning, Swaraj. Yes, I think dollar can recover more. Both, the positioning, the uh, technicals, as well as some sort of relook at the fundamentals justify that dollar can recover more. Let's go into the details. Yesterday in update, I already said that we should look at today's jobless claims closely because the previous week's reports showing big drop was sorry, with big rise was due to special factors concentrated in one region, and that was proved in yesterday's data, where actually there was a dump of 33,000 in the weekly jobless claims, and it came at 2,31,000, which is the normal range that we have seen of late. In fact, in a way, I could say job market fears in the US have been intensified recently after this report of jobless claims rising in the previous week. But now that has been put to rest. In fact, what I saw was that even the continued claims have fallen in the last 4 weeks from 1.94 million to 1.92 million. And this data usually indicates ability of people out of jobs to find new ones. Yes, there was also another data yesterday in the regional business survey, the Philippine business conditions, which actually rose very strongly from 25 to 31.5. New orders and then the employment, all of them were better. Of course, these are concentrated in one region. We also had some Empire State Manufacturing survey, which showed a slight decline. So all said, the economy is not slumping in the US. The fears of recession, which we often hear, is overblown. And historically, US never got into a recession, or rather got into a recession more often with a situation of financial crisis or a black swan event. And currently, economy is dealing with a few challenges, mainly tariff-related inflation. And the debate is still on whether it is going to be entrenched or one of one. The one point that came out from Fed outcome yesterday also was, apart from Stephen Miran, who voted for a 50 basis point cut, and that was not a surprise. There was unanimity among other members for a 25 basis point cut, including the well-known doves of Valor and Bowman also. So the Fed's cautious approach, I have to repeat that, I fully feel it is justified, and we need to continue to watch, of course, the economy, how it evolves going forward. In fact, I have to quote the Wall Street Journal statement by well-known journalist. He's saying that Powell's last stand is a balancing between tricky economy and intense political pressure. Fed chair is actually making a risky gambit, cutting rates, even though the economy is not flashing red. So that's the conclusion even I would like to have. Anyway, one more thing is that, if economy was moving swiftly down, that would reflect in the stock market. And yesterday we saw all indices making new high in the US, and that along with the fact that the tick data shows net fresh addition of holding by foreign countries in the US treasuries, also shows that there is no real move away from the US. At least the US assets are still being attractive, and that to answer your question, whether the dollar can see some more upside, I think that's very much possible, because there is a definite extreme sentiment from where the market can move and go towards somewhat a balanced approach for the dollar, at least for the time being, until economy seem to be really slumping. But as you said, even Bank of England kept the rate steady at 4%. Of course, the governor said there will be more rate cuts, but the timing and future, timing and the scale of future rate cuts would be it will be quite uncertain. Bank of Japan decision will be out very soon. Today's CPI data today may have given some, support for holding the rates steady. Headline inflation was down. Even the core inflation was also down. Although the inflation ex food and energy remaining at 3.3%, though down by 0.1%, it's quite elevated. And I mean, economic logic says that they should be hiking the rate sooner or later, but not today, perhaps. Yes, on the market, we have had a reversal, sharp reversal in the yields. 10-year yield is now at 4.12%. It had tested 3.99%. All the fall in the yields had happened on expectation of heftier rate cut by the Fed, and that is now got reversed. In fact, yesterday's move in the yields was a bear steepener. Just to explain the bear steepener, yields rose across the curve, and the yields in the longer tenor rose more than the shorter tenor. So that is indication that markets expectation of rate cuts by the Fed is getting somewhat moderated. But all said, I will still look at the upcoming PCE number later in the month, and then the crucial jobs number on 3rd October, because those are the numbers that we will continue to track to see where the economy is going. On the Rupee, yes, it was, of course, a swift reversal for the Rupee from the big recovery that was seen, and it with no definite indications on the trade talks, despite some recent calming exchanges between the Indian and the US leaders. It's a long way to go before we achieve a relief on the tariffs, and that is the single most important factor that will determine the direction of the exchange rate. We are also seeing a decent correction in the dollar now to the upside against the major currencies, and we can expect Rupee to track these moves and remain a bit weak. As I see, dollar index also rising about 1 to 2% in a correction that will put Rupee on course to retest the recent resistance at 88.50. Of course, we will continue to watch the developments on trade, where interestingly, an official statement said that the penal 25% tariff can get removed in November, and even the reciprocal tariff can also see a downward revision. All this likely to happen in November, but then market will not count on these things until they see some real progress. Therefore, the Rupee will remain in a weaker range between 87.70 and 88.50. In fact, we had been saying that the 87.70 is a crucial support that will hold. For exporters' point of view, I would say if they have a long-term exposure, it is still recommended to take advantage of a spot move above 88.30, along with the premium of 2 rupees 10 paisa for 1 year, which is currently on the higher side. So that partial hedging is quite okay. But then not to commit too much because the rupees, upside, rather the rupees downside is yet to be fully cemented. So I think dollar overall is on course to recover broadly based on the market's positioning, and also relook at the overall view on the economy, and that will also keep the dollar rupee on the higher side. Thank you.
Thank you, Jake. And I think the major theme which I get, even from the data which we got yesterday on the jobless claims, which showed a fall, even the fall in continuous claims, all of this show that maybe the US economy is not as weak as what people have been thinking. And that's why we are seeing a bit of dollar strength, at least till yesterday. We did not, after making a new cycle low, we have swiftly recovered. So there is some a sort of underlying strength in the dollar, and that recovery can continue. That's the major theme we'll be playing at for the next few weeks at least. Uh, and when it comes to the meetings, Bank of England held rates, Bank of Japan rate should be out soon. Interestingly, Japanese inflation released today morning was lower, but except for the food and energy part, it seems on the elevated front. Uh, Logically, they should raise rates, and I think JK, if I'm not wrong, they would use this meeting to set up a rate hike for October. Like that's the expectation.
That is the expectation, but I think before that they have a leadership, contest coming up on October 4th,
Hmm.
October 4th or 6th. I think because the new leader, uh, who is now currently favored to win, is more of a fiscal dove. So they, you can see more spending and all. So that will also be some sort of a influence on the monetary policy. So if they do have fiscal expansion, that can actually spur Bank of Japan to move more quickly on the rates.
Right. There you have it, folks. So if I think Bank of Japan moves on rates, there will be some sort of a turmoil in the markets as we have previously also observed. So that's a story that is ongoing, developing, we'll be tracking constantly. When it comes to finally, when it comes to India, where rupee saw swift reversal from the recovery it had seen. We can pass rupees 88. Dollar index strength might put further pressure on any recovery on the rupee. That's it from us today. Thanks for listening. Have a very good weekend. We'll catch up on Monday with a fresh round of updates.